Hi, Assalamualaikum. My name is Imran Hisamuddin. I am from TBA1144E and now I'm going to present about price earning ratio and earning per share and dividend per share for IHH, Healthcare, Berhad, and also the comparative for KLCI Index and IHH, Healthcare, Berhad. The company's price to earning ratio is 50%. Investor and analysts use the price earning ratio to measure the relative value of the company's shares when comparing apples to apples. The price to earning ratio, also known as the price multiply for the earning multiply, is a ratio that compares the price of the stock to its earnings. It can also be used to compare a company's historical performance to do that of the companies or to compare aggregate market for time periods. The lower of PER, the lower the return on investment for investor. Also known as the price to earning ratio, it is a method of valuing a firm by comparing its current share price to its per share earning price, EPS. The company earning per share EPS is 11.21 cent in the second column. The profit of a firm is divided by the number of outstanding shares of its common stocks to calculate earning per share EPS. The resulting value is used to determine a company's profitability. It is normal for a company to declare EPS, which is adjusted for unusual item and probable share dilution. The higher a company's EPS, the more profitable it is to be. The decreased EPS is due to a drop of the profit allocated to the company's shareholders. In the meantime, the greater EPS is owing to the company's owner large contribution profit. Last but not least, IHH Healthcare's dividend per share is 4 flat cent. The total dividend paid by the corporation for each outstanding common share is known as dividend per share (DPS). An increase in DPS might communicate to shareholders that the company is performing well. The chart above show IHH Healthcare Berhad and FTSE KLCI index until 30 June 2021. From 2 November 2020 to 30 June 2021, both IHH Healthcare Berhad and KLCI index have two different major trends. IHH Healthcare Berhad has downtrend through early January 2021 until February 2021 and continue sideways until bullish Marubuzu on 6 May 2021. Meanwhile, KLCI index show downtrend from December 2020 until 30 June 2021 as follows the economic inflation in the country and also the COVID-19 pandemic.
Hi, my name is Muhammad Hilman bin Hashim, and I will present about trend analysis for the company we choose, which is IHH. First of all is the main trend. The main trend represents the market's broad underlying trend and can last from a few months to a few years. Market can be bullish or bearish. Main trend has three phases. First, the cumulative phase. Second would be public participation, and the last phase is excess phase. The cumulative phase, the higher low before the uptrend, represents suggests that the trend is shifting and is used to trigger the accumulation phase. Public participation, reversal reaction, and marked as a new main trend move. This is the suitable time for investors to participate, taking a long position to send the price higher. Excess phase, as we can see, the market price rises higher and higher. If the upward move start to show weakness, this could be another sign that the trend may be near the start of a primary downtrend. The second one is the secondary trend or intermediate trends. It represents correction in the primary trends and usually lasts for 3 weeks to 3 months, with retracement normally between 1/3 and 2/3 of previous trends. As we can see, there are several examples of secondary trends found on IHH stocks. And the last one is minor trends. Minor trends are short-term movement that last between 1 and 3 weeks and are usually used by traders to buy stocks in a short period of time. Shares will be bought in a short time to get a quick profit in a short period of time. These are some minor examples of trends found in IHH shares.
Hi, Assalamualaikum. My name is Amirul Aiman bin Abdul Aziz. Now I'm going to present price pattern for IHH company in 1 year duration started from 1st July 2020 until 30th June 2021. There is 7 pattern that we have find out in the 1 year duration. Number 1 is rectangle pattern. Starting on 1st July until 21st September 2020, it forms a rectangle pattern where the price start in the box there. Number 2, runaway gap pattern. There is a runaway gap pattern between 6 November and 9 November 2020, and the graph shows a positive sign when the uptrend has formed then. Number 3, head and shoulder bottom pattern. formed on 12 November to 30th December 2020 and then show a downtrend. Number 4, head and shoulder top pattern is formed on 22nd April to 3rd June 2021. Right shoulder does not pass the bottom neckline, where it then shows an uptrend after that. Number 5, pennant. Starting on 25th January until 26th February 2020, there is a bearish but inverted pennant. In addition, there is a breakaway gap which occurs on the date between 26th February to 1st March 2021. Starting on 19 March until 21st April 2020, there is a symmetrical triangle pattern formed. The breakout point is on 22nd April, where it breaks the resistance line. And cup and handles pattern takes place on 8 September to 6 November 2020. The handle indicates a valid downtrend but does not pass the breakout point. Second, cup and handle pattern formed on 11 January until 3rd March 2021. It showed the shape of the cup, and then on 4th March until 10 March showed the downtrend handle. And the last cup and handle pattern occurs on 7 May until 18 June 2021. The handle indicates a downtrend is occurring and no other movements are occurring yet.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Tarmizi bin Shafaruddin from TBA1144E, and I will explain about the SMA 15 days and 100 days and the double SMA. Single SMA 15 days indicates the sell and buy signal. It will tell how the price movement will be going, whether it will go uptrend or downtrend. When the closing price cross above the moving average, it is a buy signal. When closing price is cross below the moving average, it is a sell signal. IHH Healthcare Berhad indicates buy signal 4 times and sell signal 4 times within 1 year of period. Single SMA 100 days also the same as SMA 15 days. The difference is that the signal is a bit late than SMA 15 days. That's it for SMA 100 days. In double SMA, there is a cross rule. The name of the crossing will be whether golden cross or death cross. Golden cross is when the shorter average cross above the longer average, and death cross is when the shorter average cross below the longer average. Golden cross we can interpret as the buy signal, and the death cross is the sell signal. Within a year, there's 8 times where the average cross each other. 4 is golden cross and other 4 is death cross.
Assalamualaikum, my name is Amir Shafiq from class TBA1144E, and I will continue with MACD, RSI, Stochastic, and William R. For moving average convergence divergence, or MACD, while using the chart above, on October 21st, 2020, the MACD shows a cross between two lines and indicates a signal to make a purchase. The MACD crosses above the signal line, and MACD turns up below zero to indicate a buy signal for the stock. While the cross for the sell signal, MACD crosses below the signal line and turns down above zero. A bullish divergence forms when the security records a lower low and the MACD forms a higher low. A bearish centerline crossover occurs when the MACD moves below the zero line and turns negative. The chart shows a bullish divergence in October 2020. The MACD formed a higher low as it formed a lower low in October. The MACD turned up with a bullish divergence and a signal line crossover at the end of October. Now for Relative Strength Index, or short for RSI. The charts above show IHH with 1 year period RSI. IHH became oversold by signal in early October 2020, where it showed the indicator is at level 32. From the oversold level, it moved above the 70.226 overbought line on 10 of October 2020. Then it dropped to level 30 oversold line at late January 2021. After it moved above to 69.07 on 2nd of March 2021, the final overbought indicator is on 18th of June 2021, which indicated on 73, and it started to peak from 5th of April 2021. Now for this chart, it shows bearish divergence from 8th of September 2020 to 7th October 2020. then started to bullish from 10 November 2020. Next, on 17 December 2020, it started to bearish back until 24 of January 2021, and then bullish back to 2nd March 2021. The last bullish divergence starts from May 2021 until June 2021. Next part, we jump to stochastic oscillator. Now, the chart shows IHH trading between 1st July 2020 to 30 June 2021, dips below 21 of oversold, which is buy signal, and when it moves to above 81 of overbought signal, which are sell signal. The buy signal is the percentage K line, crosses above the percentage D line in the oversold range, which is below 20. The buy signal for 2020 occurred in July, August, September, and December, while in 2021, buy signals occurred in January, April, and May. The sell signal is the percentage K line, crosses below the percentage D line in the overbought range, which is above 80. The sell signal for 2020 occurred in July, August, October, November, and December. The sell signal for 2021 occurred in March, April, May, and June. Overbought readings were ignored on 22nd October until 24th December 2020 because the bigger trend was up. For this chart, oversold readings were ignored on 14 September until 15 October 2020 because there is a bigger downtrend. Bullish divergence occurred in 6 November 2020 where there is a resistance break. The indicator shows that it breaks above 50, while bearish divergence occurred in 11 January 2021 where there is a support break. The indicator shows that it breaks below 50. For the last one, it is William R. William R is a momentum indicator that measures overbought and oversold levels. It will compare stocks close to the higher low range over a certain period of time, usually 14 days. William R oscillates from 0 to negative 100. Now for the indicator from 0 to negative 20 are considered overbought, while negative 80 to negative 100 are considered oversold. When the William indicator is below the oversold line, then it rises cross over the negative 80 line. It indicates buy signal. When the William indicator is above the overbought line, then it falls below the negative 20 line. It indicates the sell signal. In the chart above, the black dotted line marks a move below negative 20 that occurs after an overbought reading. The blue dotted line marks a move above negative 80 that occurs above an oversold reading or not. IHH touched 8 times below the oversold line and 12 times above the overbought line.